Good evening, peoples. It's Bruce with Targeted Wealth Creation. It is Tuesday afternoon across the U.S. Let me jump into Roundhill declarations for their 3 weeklies and also the YBTC, which has become a weekly. So let's jump in here and take a look at these guys. All right. As you guys know, I have a few different screens to show you. So let's just jump in and see what the payment was. Obviously on XDTE, the S&P 500, we're talking 23 cents. So it's up from 17, and you can look here historically. These are all the weeklies, right? We had the big ones at year end, right, where they paid out excess capital collected during the year. So there's an 18, a 36. So it's all within scope. I'd say they run from, 9 or 10 cents to up in the high 60s. So 23 is yielding us 24% annualized, which is still a terrific. Again, I've always said this to you guys. If Warren Buffett could get a 24% yield for 25 years, he'd be ridiculously happy. Obviously, where these people make big money is through purchases. It's why I say to real investors, even some people that want to trade, there's a lot of ways out there to make money in the markets. It's a diligent, in order to do it well, it's almost a full-time job. Most people that work and say, oh, I do a little bit of trading, you kind of get a little bit of results out of it. So I get it. And if you're older and you just want income, that's great. But people always ask, and I remind everyone, when you come out and say, hey, is this realistic to expect these kind of yields? You go to YieldMax and you look at a Misty, you look at NVIDIA when it was really running, you look at Coney, you look at some of the SMCY now. You look at some of these things and you think, oh man, if I can just do that for 5 or 10 years, I can retire. Well, guys, there's no guarantees. It's not like the companies, YieldMax and Roundhill, they're not going to get rid of these funds. They would only get rid of the funds if the market changed the dynamics and the assets under management just crashed. Everybody sold and got out of them because they couldn't get the yields, right? And they don't determine the yield entirely. Yeah, active trading, methodology, there's all kinds of things that go into how successful they are. In my opinion, on these weeklies, Roundhill has been the king. They went there first, they've established it. Now, interestingly, we just saw, and I don't blame YieldMax. If I was them, they're doing all the right things. They're kind of the behemoth out there with all these single stock funds. I can remember when they were in the double digits, 11, 17, 19. I remember thinking 20 was a lot on their single stock funds. They always had YMAG, they always had YMAX. Then they went to weekly on those by breaking the groups up. And now you've seen something I reported on Curve. Okay, so Curve is now with their 7 funds, they're almost mimic the Mag 7, but not quite. They got Netflix in there, and then they have a Text Titan. Um, so they're doing, just 2 stocks in creating a weekly out of that. So look at that video if you want. So I'm just trying to keep you guys aware of what's out there and what's going on, um, so you know. So what I'll say here is Roundhill's doing a great job. I just got in one of my comments that YieldMax is now trying, or sorry, Roundhill, and I'm going to study this for you guys. I haven't had a chance to check it out, is now going to be offering Misty Coney type single stock funds that pay weekly. Well, my thoughts are, in order to pay weekly, the shortest duration you can really write options for are pretty much weekly. I haven't seen anything where they're offering daily options on individual stocks. They do it on the indexes. That's what Roundhill did with the zero expiration, and it's been brilliant. There would be a strategy. I'm going to get into this more in a different video. There would be a strategy if one wanted to pay weekly on the single stock funds by obviously using weekly options. Yomax has done that a lot. But what you'd have to do is start the fund and then have it in arrears and really stick to that weekly. Because sometimes Yomax, in order to get better results, is put spreads on, or they sell it during the week and then put another one for 10 or 11 days. Well, when you're having to pay weekly, you get a running start, right? So you're paying from the previous week. Look at Yomax in its groups. When you want to know what they're going to pay on YMAG and you go, okay, well, I'm in Group D, you find that the only payer of the Mag 7 was in Group C, and it only had MSFO, the Microsoft, right? Single stock. So with one stock instead of two in the other three groups, theoretically, it's only going to pay half, and MSFO is not one of the big payers. It's not like a Coney, a Misty. That's why every group got a Tesla, a Coney, a Misty, an NVIDIA, right? So you put some big payers at least in there in those groups. So this may be confusing for some of you that don't fully comprehend what I'm saying. Anybody that's in these funds a lot will totally understand that. So I'll make a separate video when I study what Roundhill's going to do, but it sounds like they're going to offer some weekly. They've been the king of weeklies. I got to say that to you. Yomax has been out there doing the weeklies for a long time. If anything, in some of comparable funds, I like what Curve has done by writing monthly options. They don't yield as much, but their NAV is more consistent, right? So when you look at total return, go look at TSLP and look at TSLY. I mean, TSLP is just fabulously outperformed in total return. They don't pay as much. They may only pay half as much, but when you add what the NAV is into the dividend yield and you're 30 or 40% less than what Curve is, that's worth looking at, right? If they end with an even total return, let's say they're 5%, but Yomax is paying you 3 times what Curve is paying, then I say go get the money along the way. The total return's close enough that you'd rather have more money paid to you, even if you're getting NAV loss or erosion, because you get to use that money. If that makes sense to you guys. All right, now I'm going to continue on this. Sorry about the rant, but I think it's worth mentioning for those of you that understand it. If you don't, say, hey, Bruce, can you make a video on that and explain it in more depth? I'll be happy to do that. All right, guys, so 23.3, 24.11 yield. And again, I make these green or red. What did it do since last week? Well, it's up after 2 weeks of being down, right? We had a big up. We had a big down week here, a big up week, a couple of 30-cent declines, and we got a 16% improvement. Certainly decent. All right, let's go look at the NASDAQ 100. All right, so what do we have here? We have a 32.49, 25 cents, a little bit more. We're still up 2 weeks in a row with small gains on the Q. You'll notice that the RDTE is dropping. All right, so a decent, I color code these different, guys, so you can see them here. The orange is always the current payer. And no reason to go to the chart because we only have 2 payments. When we get to 4 payments here, I'll show that as a monthly total. Okay, guys, so let's look at RDTE, the Russell. Again, 3 consecutive, right? We had 1, 2, 3, 4, 5 consecutive. So the Russell's being beat up, have a small gain, a big loss, a big gain, a better gain. So these about, you know, and then now we've had 3 in a row. This is minuscule, but this one is 34 cents. So the yield is still up there. It's still yielding and paying well. But again, you have to take notice of that NAV erosion again. So what do? If you can, you cost average, right? You buy when it's down if you want to be a long-term holder of this. Because listen, no matter what, look at the political scene, look at the new administration, we're still in that infighting in the parties. They're still hating on one another. I can't figure out why common sense shouldn't just be common sense, but people want to fight it. They want to protect their payments. All right, so XPAY also is paying, but that's a declared mode, right? So if you want a safe XPay, you want a 20% yielder. Look at this. This is what you're getting, right? They're going to target that. Remember, ultimately, the markets decide if you're going to end up with NAV erosion hurting that or you're going to have additional gains. But they're trying to target you at 20%, which may end up, people may flock to this kind of stuff if they see other things aren't doing as well. All right. Let's go to a summary, and then I'm going to do YBTC for you because that's gone to weekly and they're paying. So here's your summary, and this is worth noting, right? So I've updated the current price. This is your inception. Again, guys, I always say this to you. Put your own data and do your own spreadsheet. Some of you do, some of you use Snowball. There's a ton of tools out there. I just do it for you the way I do it. I'm happy to give you any additional info if somebody wants it. Um, so I use the inception dates of 3/7 on the NASDAQ and the S&P 500 and then September. So you see the days are close to 365. So whatever your annualized number, it's not that far from what the dividend return number is now. It just gives you another 23 days, right? So you get a little bit more of a multiplier. You got a 1.06 times this value to get this value. But what's important, I always say this, total return, right? So I got a 20, perfect example. Just think about this. I have a current price of $50. Okay. That's dropped $2 from way back on the inception close price day, right? On 3/7, the close price. Here's your current price. This guy has dropped six. So it's a better payer. There's no question, right? The dividend annualized is 33% versus 24%, right? So you got a 9% advantage because it's yielding you more money. But look at your loss. This is your NAV erosion or your NAV loss. People say, well, it's not a loss, Bruce. Well, any accountant will tell you go out and figure out your net worth. You go out, you look at all your stocks, you add them up, you look at all the things you owe money on and everything else, and it's your net worth. So it's certainly used in financial accounting in many, many ways, people. So it's not an erroneous or a lying area. Those of you that if something is paying you a huge amount of money and it just drops and drops and drops, look at Defiance. I mean, their equivalent funds are horrible, in my opinion. I don't have anything against Defiance, but I mean, they're just on that. They have some other products, but on their equivalent here, boy, they just drop and drop and drop. I think everybody says, Bruce, don't even bother to do the video. Maybe you should just drop it. I still do. I don't think I did last week, but I'll do another one, but I wouldn't recommend it. It's pretty obvious to me that they're not the best company by far. So here's all your dividends, but here's where you drop. How's that even possible that total return is higher here, 20 to 19? Now, I accept if you say to me, hey, I like the NASDAQ 100, it pays me more along the way. That's not a problem, right? Because you're getting 9% more, but your actual price, and you say, well, yeah, but Bruce, I got in and I got a good price. Okay, well, you could do the same thing on XDTE. You could get a good price and time it. I'm just telling you what they've done over 342 days, right? And look at RDTE. It's only got 155 days. It's still yielding more money. It's still a good payer, right? And it hasn't eroded that much, 40 from 42, right? So we're only losing 7%. So it's the winner out of these guys. But you always have to ask yourself, well, Bruce, that's looking at, let's say you haven't gotten in it and you're going to make a Roundhill decision and you go, okay, well, I'm going to go out and I'm going to pick one. And I did this when I was in my 20s. I remember, and they first started doing the 401ks and that, and I went out and I studied a fund. I don't even think they called them ETFs then, but they were mutual funds. When it was up 107% the year before. I thought, well, I want a winner like that. I bought it. Well, it went down like 35% that year. Well, duh. I mean, your average is probably going to be 12% a year over time. Depends on what sector, depends on what you do. But that's why I say battle tested. I've been doing this stuff for 45 years, 40 in options and 45 years in the market. Where in my 401ks, I have to take RMDs. Okay, so that I prefer to play with my money in there for my income, so I don't have to pay as much taxes. So I'm liking what Trump wants to do about having no taxes on Social Security. So all of a sudden I get my Social Security, I get massive income, and all of a sudden I end up paying half back on my Social Security because I'm getting taxed hard on that. So anyway, and everybody's thing is a whole different world, right? If you have money that's outside the tax deferred. All right, guys, let me get so XPay paid again. I think they're in the 95% now, or 95%. They're paying 95 over the course of these payments this year. They were paying 97, but they're still yielding fabulous. It's a conservative fund, but conservative isn't bad. All right, people, I owe you YBTC. Did I finish Roundhill? Yeah, I finished across the three areas. You saw what those distributions were. If you scroll down, right, we paid 25, we paid 23, and I think 27 on the last one on RDTE. 25 right there. All right, people. So that's what I got for you. Let's do YBTC. And so they've switched. I color coded these from white to blue. What's the significance? Because now they're paying weekly. Before they were monthly. All right. So let's see, what did they pay? Well, they paid 29 cents, quite a bit down from 56, but that's the volatility, right, of BTC itself. 87 cents, 32 cents. So you can see these ranges and all of a sudden outside of weekly. So that's the lowest weekly we've had, because back here, I probably should change these to blue as well, or something to distinguish them, because they were all monthly pairs. You can't compare monthly pairs to weekly pairs, right? So this would equate to over $1, and already we're 85 cents in with two payments. But here's two payments that were over $1. Here's two payments that were in the 80s. So it's all within scope, and that's what you expect. What I do up here for you guys is YBTC over time has been the superior fund. I didn't like YBIT on BITO, but they're now using IBIT underneath the underlying, just like YBTC is doing. So I think they've stabilized. And in some fairness, these guys now are included in this dividend, the new payment in February, right? That they've declared. So I included that. So their dividend return over 391 days is 53. Well, when you normalize that over 52 days, or 365 days, 52 weeks, you get 50. What's happening in YBIT, they will get a payment added in, okay, a monthly. So if they come along and add, this is the total, but you see they're 87.79, $1.26.70, 78. So you will get a payment on around the 22nd of this month. And let's say it's 80 cents, 70, 80 cents in there. You're going to have a little bit more money and some fairness to their dividends. So you make this like $9.20. Okay. So they are winning, like Max does a lot. They're winning when you do dividend annualized and when they get their February payment. But again, remember that YBTC will keep doing the weeklies, right? They'll keep gaining every week. And these guys have another 2 weeks ish, okay, till they get their full monthly. But I just wanted to point that out if somebody says, but this number is turning positive finally. This was negative. What's the difference? It's not the yield. It's the NAV loss, right? This thing is setting at, did I update this? Let me get a current update on YBIT. 1198, if anything, that's a current. All right. All right, so now I'm back to red. Those are all the things you have to do when you don't exactly have apples to apples. I mean, they're the same concept. You're investing in the same thing. It's just how you manage it. All right. So it's clear where they're getting hurt is in their NAV. I do think it's stabilized. Go out and look at the charts. I don't want to take your time in this. I got more videos to do. All right, peoples. This is Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. It's for fun and entertainment. Have a great one. Catch you later. Bye for now.